Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about Ripple and XRP, as was the vast majority of crypto and finance. And with that being said, I hope that you are all having a beautiful day or a beautiful night wherever you guys are out there in the world. So for the longest time around the XRP community, there has been this saying. And the saying is flip the switch event, right? That's the big event. Flip the switch, flip the switch, flip the switch. What does flip the switch even mean? What is this type of event? Is there a specific date for it? Is XRP going to skyrocket from it? All of that information is going to be addressed in this video. Now, do I have the answer 100%? No, nobody does. But I will say this. Do not put any weight behind any date. Dates around this space, dates around anything happening, they mean nothing. I have witnessed dates get thrown around the XRP community for the last, I don't even know how many years. 9 times out of 10, none of them realize in. But I will say this. This video and this flip the switch event is not exactly what you think it is. And we're going to be talking about that. So let me play the clip. Listen closely to what is being discussed here.
So you know that you've got this switch right here, that all you have to do is, I'm going to flip that switch up. No more BTFP come March 12th of 2024. And you know that your inflation problem is gone.
But replaced by what? Replaced by a banking crisis, which means what? Which surely means a recession, surely has broader ramifications.
And surely means
inflation.
CBDC.
Well, yes. Well,
and surely means a CBDC.
So
there's that incentive layer on.
When we were talking in March, I had several guests on the show that actually predicted or forecast or made us aware, like you do, of the possibility of a consolidation of the banking sector, which allows for a CBDC. Fewer banks there are, the closer you are to the Fed, the easier it is to implement a CBDC.
Even if it's not the Fed's balance sheet. Let's just assume that all the banks got absorbed by JP Morgan. So you've got the Fed and JP Morgan. Well, let's remember who owns the Fed. That would be JP Morgan. That would be the banks. Yeah. So if there's only one bank, then they own the Fed, right?
The banks own the Fed?
Absolutely. Yeah, the Fed technically is a private corporation.
Right.
And they have shareholders.
Yeah.
And the shareholders are the banks that are within their network, in their system, right? So if there's only one bank left standing, then by definition, they own the Fed. So basically you have that Gauze bank type of scenario that we talked about earlier, which was the one bank in communist Russia that could not go bust. So whether that one ledger is on the Fed's balance sheet or JP Morgan's, it still doesn't matter for the average Joe and Jane. The net result is the exact same.
Now, like I said, as we really think about this flip the switch event, I look at this more so as a reset. And I've talked about this multiple times in the past. I think that the flip the switch event gets thrown out there too much to allure to a certain idea. But there is certain things that could change the trajectory of the markets in a near instant. There is things that could put us in a position where we have this big problem and we need to usher in a solution, or a CBDC, if you will. And I do think that that's more so what the flip the switch event really is. Now, as we think about that, as we look at that, let's take a look at what this BTFP, or the Bank Term Funding Program, really means, and if it is going to cause substantial problems. Now, again, this ended on March 12th. Is this a flip that switch moment? Big shout out to XRP Drops for this. Big shout out to Digital Asset Investor for the initial video. But here we have financial stability. This is from the Board of Governors of the Federal Reserve System. Bank Term Funding Program. This was created to support American businesses and households by making additional funding available to eligible depository institutions to help assure banks have the ability to meet the needs of all their depositors. The BTFP offers loans of up to 1 year in length to banks, savings associations, credit unions, and other eligible depository institutions, pledging any collateral eligible for purchases made by the Federal Reserve banks in open market operations, such as U.S. Treasuries, U.S. agency securities, and U.S. agency mortgage-backed securities as well. Now, mainly, this is an additional source of liquidity against high-quality securities, eliminating an institution's need to quickly sell those securities in times of stress. What I really get by this, and what I am understanding from the BTFP ending, is it's just another thing that they are, piling on top of the already broken system to push it into absolute failure. A lot of people think that I'm crazy when I say this, but I truly believe that the powers at hand are planning specific things. And those things are, it's just like FTX, right? I've talked about FTX in the past. I really do think that that was a planted seed by the SEC, by regulators, to watch it grow and grow and grow and grow, and then let it implode. And then at that time, they were like, all right, well, there we go. That's a perfect example of why we need to push strict regulations and we need to control the space. Because that's exactly what we saw just hours later after FTX imploded. And it's almost like they had it already pre-planned. And now we're kind of starting to see the same thing here, where we have those powers at hand, planning specific things, pushing specific things into, the go live scenario, and applying a lot more pressure to implode certain things, make sure things are starting to break down in order for us to usher into this new system. Now, call me a conspiracy theorist, call me a tinfoil hat wearer, it does not matter, but realistically speaking, if you go all the way back to 2020, and you could even go back to 2008 technically, these problems have always been there. But they utilize specific events like the pandemic to accelerate things. For an example, digital currencies. The pandemic was a perfect example of saying, hey, look at cash usage is dropping significantly. We need digital currencies. But of course, cash usage was going to drop because guess what? You have people in their house locked down that are only buying things online. But again, you have this problem, you get the reaction, then you have the solution. And that's exactly what we're seeing. Over here from Finance Law, we have the Fed's emergency BTFP is gone. Time to see what's hidden under the carpet. And here we have the BIS spoke today. The BIS spoke today concerning the second phase of the credit cycle where credit losses are suddenly realized by financial institutions. This will create instability and liquidity issues within the banking system. When we are talking about the flip the switch moment, it could very well be an implosion of the banking system. This is going to cause a lot of liquidity issues. We've initially talked about Basel III. Basel III was going to provide a lot of pressure to the banks as well because, again, it was putting a lot of provisions on the banks, and it was going to make sure that their reserves are backed one-to-one in terms of deposits. But guess what? Now they're starting to change a little bit of things around that, but this, you can't change. It's ended. The BTFP is ended. But listen what the BIS was talking about when it comes to liquidity, instability, all around the credit cycle. And now that this is ending, it kind of makes me think about this video yet again.
What we have seen so far in terms of market disruptions or market stress has been associated primarily with the materialization of interest rate risk. But the next leg that and the question is not so much whether it will take place, but how intense it's going to be, is the materialization of credit losses. And that's basically what's related to the credit cycle and the weakening in economic activity. And so at that point, the question is going to be how resilient the overall financial system is going to be in order to absorb those losses, and particularly how large and persistent those losses are going to be.
Previous reports, you've warned us about the property market issues and it potentially being one of the next shoe to drops. That has seemed to have gained a little bit more traction in recent months. What's your latest view on that risk ultimately?
Very briefly, just a couple of points. Let me sort of make a distinction between the commercial real estate segment and the housing market. Commercial real estate, that's a sector which is facing headwinds, both from a structural and cyclical perspective. And I think that conditions are likely to deteriorate further from where we are. And we could see some strains both among financial banks as well as non-banks. As regards the housing market, something which has been puzzling, at least for us, but I guess not only for us, is the fact that in quite a number of countries around the world, what we have seen is that lately house prices have actually stabilized or indeed started going up again. And then whenever that happens in a number of countries, the question is, well, what's going on? Especially what's going on at a time when the economy is weakening. So this is rather unusual. Now, of course, you can have many explanations that apply to individual countries, and I've heard quite a number of them. But the phenomenon is so general and is happening very much at the same time across borders that suggests that some common forces are at work. Now, exactly what those common forces are, or at least what the relevance of them is unclear. Now, some of them are structural, in which case they provide some sort of comfort. For example, I think one can argue convincingly to some extent that what we have seen post-COVID is a fundamental change in preferences, with people asking for more space because of the working from home. Another aspect, however, is more conjunctural, and I think it's worth reflecting on because it ties back to what I said at the beginning. And it is the fact that financial markets are seeing that the interest rate cycle, the monetary policy, the peak in monetary policy tightening has been reached. And this goes back to the risks that I mentioned at the beginning. That could well be the case, but the risk that inflation might turn out to be more stubborn than expected is something that we should not rule out. And if there is a fundamental common factor behind all the types of vulnerabilities that we see these days, is that they are, to a large extent, the legacy of a period of very low interest rates that lasted very long. And therefore, business models, trading strategies that were predicated on that assumption are particularly vulnerable to current conditions.
Thank you very much.
Now, again, this is the BIS addressing the instability of the global banking system. This is the central bank of central banks. And I find it very interesting, right? Like, we're at this time in history around finance where, you know, majority of people understand how the system works, right? We all understand how the fractional reserve banking system is a complete scam. We know that everything around us in terms of monetary policy is a complete joke. And we're starting to see things piling up. We're starting to see a pushback on the dollar. Everyone's trying to avoid the US as much as they possibly can in terms of utilizing the US dollar or any US-based financial system. At the same exact time that all of those major nations that are really kind of pushing back, they're also looking at the next generation of financial technology, which is digital systems, digital assets, digital currencies. How can we streamline things? But also when it comes to the BIS and when it comes to the Federal Reserve, right? When we go back to this initial video where he's talking about what the next phase is after we get that flip the switch moment, we have banks starting to collapse, what comes next? CBDCs. Well, guess what? Tom Emmer, who's a congressman, he put out a post on the 13th saying, if you don't think the Fed is pursuing a CBDC, think again. The Fed gave this to my staff during a presentation earlier this Congress. They view a CBDC as one of their key duties. And here we have key duties of the Fed: payment systems, currency, check collection, automated clearinghouse, ACH, wholesale payments, FedWire Fund Service, FedWire Security Service, fiscal agent of the U.S. government, FedNow, and CBDCs. Again, when we go back to the initial view, right, they're launching this or they're ending the BTFP, which they already did. This is ended on March 12th. And now congressmen and Congress is getting handed out these papers regarding the key duties of the Fed, and a CBDC is one of them. Now, mind you, this is not the only nation that's pursuing a CBDC. 93% of all central banks are pursuing a CBDC. At a time where it seems as though the central banks are sabotaging the system. Outside of this, we also know on March 11th, the BIS just put out a post regarding faster payment systems and faster payments. This is all around certain design features. And it's interesting because if you go over here to the report, and I did include this recently in a quant video, actually, if you guys did watch that, it's all regarding the payments landscape and how it's evolving rapidly. And fast payment systems have emerged as a key innovation. But the focus is the design of them. But they also do mention the CPMI. Here we have the CPMI group. And the focus here is concerted efforts by both the public and private sectors have transformed the payments landscape by offering faster, cheaper, and more inclusive payments. Households and businesses in over 100 jurisdictions now have access to fast payments, with more to be launched in the coming years. This is from the CPMI 2021, World Bank 2024 as well. Now, down here, we have the key takeaways. Fast payments have achieved mass adoption in some jurisdictions, but not in others, with adoption likely depending on the design characteristics of different fast payment systems. Adoption of fast payments tends to be more widespread when the central bank owns the faster payment system. Again, going back over here, you have the Fed Now service. This is essentially owned and operated by the Federal Reserve, with third-party actors providing settlement and clearing layers. Volante Technologies, for an example, Ripple, you name it. And then we also have the central bank digital currency mentioned. But what's interesting is that if we scroll down, we could also see an overview of this. We could see a full breakdown of this. The CPMI group is mentioned multiple times. Down here is where we do start to see a little bit more regarding central banks in the private sector, how they've been involved in the provision of faster payments and fast payment systems. But then also we have the key elements of a fast payment system design: user focus, infrastructure, roles, governance. Here's the user focus they do mention as well. Down here we have the infrastructure. Now this is where things get a little bit more interesting, because now we get a little bit of a viewpoint on what's happening regarding the infrastructure. So apart from the settlement system, various other types of infrastructure are key to the functioning of a faster payment system. These may be additional systems like proxy databases, which are responsible for enabling aliases. Going back to the Fed Now service, do you guys remember why I said that Volante is a big focus point because they are a major tech provider for Fed Now? It's because Volante provides API-based integrations. RippleNet is an API-based integration, which means you could tap into Ripple payments through RippleNet with XRP. Why am I bringing that up? Well, because here we have, additionally, FPS, faster payment systems, may also rely on messaging standards like ISO 20022. Volante Technologies, by the way, put out a spotlight on RippleNet and Ripple themselves as being the first ISO 20022 compliant company built upon DLT, or API standards for communication between PSPs. This is very interesting now, because all of this seems as though it's fully connected, and like I said, they have to provide a problem around the current system. All right, well, you know, things are starting to break down. Things are starting to implode. Banks are failing. We need to usher in a new digital currency. We need to usher in a digital system. Even here, you have the pandemic being a major focus point as well. Again, you can clearly see the problems that they are utilizing as a major catalyst to push things forward at a faster rate. Now, over here, we also have, sure, Ripple is the only company in the list utilizing a public crypto asset as part of their products. But where is R3, Hyperledger, and Consensus? You see them in almost all CBDC trials in the BIS Innovation Hub projects. None of them are mentioned here at all, just Ripple. Ripple's the only crypto-based company on here that has a public crypto asset tied to their products, which is crazy to think about, but this is from the CPMI. Again, the Fast Payments Design and Adoption paper that got put out on March 4th is all quoting the CPMI group. It's absolutely insane, and it's all based around cross-border payments and faster payment systems and infrastructure. Now, also outside of of this. Let's go over here to ISO 20022. Let's do it. Now, this goes back to July of 2023. We have Ripple plus the ISO 20022 plus standardized API. Guys, go back down to the infrastructure layer. Here you have the infrastructure layer. ISO 20022 or API standards. Again, customers will be able to use the XRP to reap the advantages of blockchain-based transactions through RippleNet and its ISO 20022 membership, which will grant them access to a network of global financial institutions governed by rules and functional standards. Overall, the use of blockchain within the framework of the ISO 20022 standard will allow faster transaction processing and cross-border payments via a standardized API. This is all focused on the same vision here. Now, again, am I going to say, hey, Ripple and XRP 100% confirmed to move all the money? No, because I don't care for that. All we need to know is that Ripple and XRP are mentioned on multiple documents. We know Ripple is working with the BIS. Ripple is still utilizing XRP in their product suite. So let me ask you this. At the end of the day, as we start to see things really accelerate around, all right, we need to usher in digital systems. We need CBDCs. Who do you think is going to be a big player in that? And what do you think is going to be a pillar for that? I've always said Ripple and XRP are two of the biggest names when you are talking about this new system. Now, does that get me excited? Am I very bullish on the fact that we're going to be seeing CBDCs or anything? No. But regardless, this is inevitable. These things are going to happen. The central banks are pushing this. 93% of them are experimenting with CBDCs. This is why I invest in the technology stack that is being mentioned consistently in documents. People completely forget about the connections that Ripple has, even with the central bank of central banks. The infrastructure layer is the underlying plumbing. That is changing. These things are changing. Now, I put out a post regarding this back in September. And it was because of this video by Finance Law. I said a new monetary system is coming. It's impossible not to come to that conclusion. Our traditional monetary system is failing. We are at the point in time where we are seeing the transition happening slowly but surely. I told you all back in May that it will begin with trade finance. September 20th, the Electronic Trade Documents Bill comes into effect. That already went into effect. We have been watching this with around XDC, not a price driver. This will usher trade finance into the digital age. This is where it all begins. Harmonization of standards is starting, i.e. MLETR, ISO 20022. The next part is harmonization of regulations, i.e. the FSB with the IMF, the BIS, and the G20. Projected global crypto regulations end of 2025. It's all coming together for full integration of DLT and blockchain within the traditional monetary system. This will start the transition from traditional to digital. And yes, the world is changing. Regardless of a flip the switch event, listen, this flip the switch event is not a price driver. What it is an accelerator. It's a catalyst. This is the Fed sabotaging the system. Regardless of if you believe that or not, this is putting a ton of constraint on banks at a time where liquidity is just starting to improve. It hasn't improved and bounced back in a strong way. It's starting to improve. Now, also, at the same exact time, I also point you guys to the Faster Payments Council. This is also another group to focus on when it comes to Ripple. I said you almost have to be blind to not be seeing what's happening around the financial system. Ripple and XRP are crucial pieces to the global financial system's puzzle. Things are aligning perfectly, and now it's only a matter of time. Those that have been a part of the XRP community doing their research and putting in the time and see the vision here. The new monetary system is coming. It's not a secret. Now prepare accordingly. And here you have from Ripple and the U.S. Faster Payments Council, transforming the way money moves. A special report from the U.S. Faster Payments Council and Ripple on the transformative opportunities of the crypto-enabled payments space and what leading providers expect next. And here we have U.S. Faster Payments Council releases third cross-border payments industry bulletin, and this is regarding CBDCs on cross-border finance or faster payments. Guys, do I need to give you guys an insight on what they're focused on as well now? APIs, March 4th. Guess what? This document from the BIS got posted on March 4th. The Faster Payments Council has been fully focused on real-time payment application layers. If you look at the leadership behind the Faster Payments Council, you can see some substantial names even in the board of directors. Look at some of these names. Very large companies, major banking players, American Bankers Association, which by the way is lobbying against crypto. I mean, you have Visa on here as well, the Clearinghouse, the Open Payment Network. You have JP Morgan, First Bank, major banking groups, guys. And also Ripple. Ripple's on this group, or on this list with Pat Thelen. There's another individual, I'm forgetting his name, but he was also on this list. I'm telling you guys, focus on the bigger picture here. And here are the working groups behind the Faster Payments Council as well. Are you interested in having a voice on issues that currently stand in the way of achieving faster payments ubiquity in the United States? The FPC is currently recruiting members for 10 working groups. Cross-border payments with MasterCard. MasterCard is working with Ripple. You have fraud with Verifin. Education and awareness, the Clearinghouse. Real-time reoccurring, BNY Mellon. Trustly with secure instant and immediate payment APIs. Digital assets in the financial industry, operation considerations for instant and immediate payments, financial inclusion, directory models, and QR code interfaces as well. Now, here's the journey to faster payments. Guys, this is with the Federal Reserve. All right? This got released back in 2017. A lot of people will say, oh, it's too old. It's too old. It's not. Ripple is still a big focus point. Even back in 2023, they were releasing documents with the Faster Payments Council. On here, you have Ripple. Description. Leverages distributed financial technology to enable real-time cross-border payments for financial institutions that join their network. Uses Interledger to enable real-time cross-border payments and interoperability between systems. Allows for originators to see total cost of payment and real-time tracking for low and high-value payments. Guys, like I said, focus on the bigger picture. The path towards faster payments is already here. It's already outlined. We're now just seeing the catalyst being brought out. Oh, inflation. Oh, the pandemic. Oh, banks are imploding. We need a new system. We need to usher in CBDCs. It's all a problem, reaction, solution. That's all it is. And focus on the players that are tied to this. Focus on the ones that are providing tech stacks for this. Because regardless of if this happens or not, there's still a ton of value behind what Ripple is providing with XRP. But if CBDCs are going to happen, I do think that Ripple and XRP are going to be significant pieces of that puzzle. And I've talked about it multiple times on why. But do I think that this is a flip the switch event? Well, I think that the flip the switch event is already in place. I think that we're starting to see a lot of big problems happening from a lot of these things that the Federal Reserve and the powers at hand, what they're doing is ushering us in to a reset, if you will. And it's already in place. It's already in progress. So with that being said, if you guys did enjoy the video, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.